There's some very interesting dynamics happening right now in the US housing market. So for example, based on my own analysis of Realtor.com's data, the number of price reductions or the change in the number of price reductions posted the biggest increase in about 1 year. On top of that, asking prices actually increased last week, yet housing inventory is still piling up by about 30% on a year-over-year basis. I have a lot to share in today's video, so let's go ahead and dive right in. This is based on a report that was announced from Realtor.com on April 25th. And just like my previous videos, I didn't even read it because I'm a nerd. Instead, go to Realtor.com/research/data and click on that link right there, which more or less takes you to this information. Asking prices, inventory, new listings, days in the market, and also price reductions as well. So let's go ahead and dive right in because I have a lot to share. And of course, if you guys get any value out of this video, then hit the like button and also consider subscribing. The most recent trends we have from them is on April 20th. It's been about 1 month since I made this video for you guys, but I'm going to provide my own analysis of their data and also provide a summary and some a summary of what happened over the past week or so regarding the housing market in the US. So for the week ended April 20th, asking prices or the median asking price on a national level actually decreased by 1.1%. Let me just zoom in here for you guys. And that, by the way, is the biggest year-over-year decrease on record. Realtor.com's data goes back to July of 2017 when looking at weekly data. So a decrease of 1.1% may not sound like a lot, but it is a big decrease we've had since their data, since they began tracking data in July of 2017. Also, as a note below there, it's possible that more buyers are waiting for prices and or rates to decrease before they buy a house. And that's contributing to a low level of closed home sales. And because of this, more homeowners are actually deciding to list their houses for a lower price now due to this decrease in demand. Also, Redfin posted last week on Thursday that we have all-time record highs for home prices based on the US median home sale price, but also housing affordability at record lows as well due to the rapid rise in prices and of course, rates as well. All right, let's change gears a little bit and talk about housing inventory, and then we'll talk about new listings. So housing inventory rose by 31.7% last week compared to the same time frame in 2023. All these figures here are the percent changes from the same time frame 1 year ago. That increase of 31.7% is the biggest annual increase since April of 2023. So more or less a 1 year high in the rate of change there. There's been more houses for sale also this year compared to last year for 24, I can't talk today, for 24 consecutive weeks since mid-November 2023, which of course gives more options for home buyers looking to buy a house right now. And that in turn limits the price growth that we're seeing today. Also, as I mentioned below, inventory has been on the rise, in my personal opinion, due to two main reasons. Number one, an increase of newly listed houses or new listings. And number two, a declining of demand or home buying demand because pending home sales, according to data from Redfin, are down on a year-over-year basis and also at nearly a 3-year low during this time frame, despite more houses being listed for sale. Now, speaking of housing inventory, I like to provide multiple sources on my channel, of course, as well. So looking at data from Altos Research.com, not a paid promotion, but they have a really good website looking at national level, statewide level, and city level analytics regarding our housing market. In any case, the most recent trends we have from them is for the week ended April 19th this year. According to them, there's 543,000 existing houses for sale. 1 year ago, approximately 415,000. So this means we have approximately 128,000 more homes for sale nationwide from 12 months ago. That's a 31% increase year over year. Also, I talk about this quite a bit on the channel, but this is super important here because We really want to focus on not the change from the number of houses for sale right now compared to pre-COVID levels, but in my opinion, we should be focusing on the rate of change. And in fact, over the past 2 weeks, inventory has been absolutely skyrocketing, much different or actually much higher compared to the rate we saw in 2022 when inventory was absolutely skyrocketing as well. So in any case, I put this together. I've been doing this for, I don't know, several months now. There's approximately 44,000 more houses for sale this year compared to the start of this year. And that's a 9% growth rate year to date so far this year. Compare that to the same time frame last year, inventory was down by 12% compared to the first week last year. So this year, inventory increased by 9%, whereas last year we were down by 12%. So in other words, supply was falling from January through April last year, whereas it's going up this year. I'll also share a chart from Altos here in a little bit. And just for fun, I added this as well, not for fun, but just for comparison's sake. The amount of houses for sale right now is still approximately 39% lower compared to the same week of 2019. Also, something I noted as well from my video I posted 1 month ago, the increase of inventory on a year-over-year basis was up by 24%. Now it's up by 31%. So the growth rate on a yearly basis is actually gaining momentum. And again, that's good news if you're looking to buy a house. We want to see more options. But of course, an increase of inventory due to decreasing demand and more new listings limits home price growth as well, which frankly is needed given the fact we have all-time record lows for housing affordability. Here's Altos Research.com inventory. This is existing houses only. Again, 543,000 right now. 1 year ago, 414,000. So at 543,000, higher than last year, but way higher compared to this time in 2022 and 21. But at 543,000, this is still less than 2020 as well as 2019, down by about 39%. Now let me zoom in, going back to the trough, which was really in mid-February 2022 compared to now. And you can see why I'm talking about this rapid rise of inventory. Here's 2022. That was when we saw a surge of inventory. The trough was around 240,000. And by the time we hit the end of July, we're already at around 540,000. So an increase of about 300,000 in a matter of months, which shocked the housing market. So what I noticed today is the rapid rise in inventory over the past 2 weeks. As you can see here, let me just kind of move my cursor. You can see this rapid rise in inventory over the past 2 weeks, which is actually faster than the previous 2 weeks we saw in 2022. Now, don't get me wrong. I think this is something we should track and see if this trend continues, because this will imply that we're not going to see this rapid rise in prices like we saw over the past several years. But I don't think we're going to see this rapid rise. It's going to skyrocket all the way until we hit, late summer months like we saw in 2022. And the reason why inventory absolutely skyrocketed then was because rates went from around 3.3%, I think it was, at the beginning of 2022, and they increased to about 7% towards the end of the year. And that shocked the housing market. It caused a lot of people not to list their house for sale. But on the supply or the demand side, it also caused a lot of people not to buy a house. They're seeing their housing payments or their would-be housing payments, basically doubling because rates more than doubled in less than 12 months. So because of all those factors, that's why inventory absolutely skyrocketed in 2022. So I'm not expecting to see that, but the big increase over the past 2 weeks is something notable that we should definitely follow. And of course, I'll definitely keep you posted with the latest developments on that. So make sure you're subscribed. Let's also go back here to inventory levels. So inventory, again, increased by 31.7. Part of the reason, or one of the main reasons I should say, is due to an increase in the number of newly listed houses. That rose by 13.5% year over year. And excluding the Easter holiday week, which was 2 weeks ago, or actually 3 weeks ago, the number of new listings have been higher than the same time frame last year for the past 26 6 weeks in a row. Again, that's a main contributor. And again, that's one of the main reasons why inventory has been rising, also due to the fact that demand has also been decreasing as well. Now, here's something that's new as well regarding days in the market, or the change of days in the market. This is a time frame, again, when you get your house listed for sale and then you accept an offer from home buyer. That's days in the market. But it's not recorded until your house is actually closes or the sale is finalized. So this column right here is a lagging indicator of our housing market. So in any case, over the past 2 weeks, it's been taking about the same time frame to sell a house compared to 1 year ago. Prior to that, about 1 month ago, houses were selling faster compared to the same time frame last year for 25 consecutive weeks. Let's also discuss the percent change in the number of reduced price listings. These are houses for sale in which the home seller was overzealous and they have to reduce their asking price in order to entice a home buyer to place an offer. So last week, that rose by 52.8%. Besides 2 weeks ago, this is the biggest annual gain since April of 2023. We've also had 13 consecutive weeks of year-over-year gains in the number of reduced price listings. It also has been more or less accelerating over the past 13 weeks as well. In my personal opinion, the reason why we're seeing the number of reduced price listings increase compared to 12 months ago is due to two main reasons. Number one, rising inventory levels. Inventory is up by about 31% year over year, which gives more options for home buyers, which means that more home sellers have to compete against each other in order to get their house sold. And number two, due to home buyers sitting on the sidelines due to 7% plus mortgage rates. So that was the percent change in the number of reduced price listings. Let's take a look at the share. So share of price drops, according to Altos, is at 32%. This means that 3 out of every 10 houses for sale right now have reduced their asking prices, a share of around 32%. This is slightly higher from last year this time when the share was at 29%. But at 32%, this is way higher compared to 2022 at around 19%, and also way higher compared to 2021 when the share of price drops was at 16%. Also at 32%, this is still higher from 2020 as well as 2019. All right, I threw a lot of information at you guys. So here's a summary for you guys, and I'll provide some, thoughts regarding what happened this week regarding our housing market and some thoughts about what lies ahead. Number one, the median asking price was down compared to 1 year ago. That was the biggest year-over-year decrease on record for their weekly data that goes back to July of 2017. This is likely due to an increase of housing inventory, more houses for sale, also due to more price reductions from the increase of inventory, and also due to elevated mortgage rates. Also, number two, housing inventory increased by 32% last week. That was the biggest annual increase since April of 2023, one of the biggest increases in 1 year. This is likely from lackluster home buying demand and a significant rise of newly listed houses. But even though the number of new listings have been on the rise, we're still down by about 39% from pre-COVID levels regarding inventory levels. Like I mentioned though, over the past 2 weeks, inventory has been rapidly rising, and this is something we should definitely follow in the weeks ahead. Number three, average 30-year fixed mortgage rates have decreased by about 60 basis points or 0.6 percentage points since last October when we had 8% rates. But because about 90% of people who have a mortgage on their house have an interest rate below 6%, that's based on data from Q3 2023, that has been limiting the amount of newly listed houses, and thus keeping inventory well below 2019's levels. A friendly reminder though, we do not need to see inventory rise above pre-pandemic levels in order to see home prices decrease. And that's exactly what we saw in 2022. Inventory didn't even get close to 2018 and 2019's levels, but home prices decreased big time in the last half of 2022. Let's watch the rate of increases of inventory in the coming months. And I'll keep you posted on that. Number 4, the share of price reductions is slightly higher from this time last year, but much higher compared to the previous 3 years. Number 5, a month ago, houses were selling faster compared to the same time frame 1 year ago for 25 consecutive weeks. Now they're selling just as fast as last year. It's flat. Again, that's a lagging indication of our housing market. So what are some potential huge changes ahead? Again, I am not a real estate market fortune teller. I do not speculate very much on this channel because if you speculate and you're wrong, in my opinion, you lose credibility. And there's so many things that impact our housing market that are completely beyond our control. How many people are going to decide to list their houses for sale? What's the direction of mortgage rates? Are we going to see another COVID pandemic? I mean, there's so many things that affect our market that makes it nearly impossible to predict what's going to happen. So in any case, number 1, average 30-year rates have increased by about 90 basis points from April 2023. So rates have increased by about 0.9 percentage points over the past 1 year. That causes a 10% decrease in buyers' purchasing power. Also, according to Redfin from last Thursday, housing affordability reached a new all-time record low due to elevated rates and home prices. And speaking of housing affordability, it's still a huge hurdle for home buyers right now. I mean, just look at the rapid rise in rates since 2021. Rates went from 3%, now they're over 7%. On top of that, home prices have increased by about 40% ever since 2019. Number 3, early signs of home buying demand have been absolutely all over the place, making it very challenging to report this to you guys, but also it's just such a volatile housing market. The most recent stats we have regarding applications for home loans to buy houses from the MBA for the week ended April 19th, they posted last Wednesday that applications decreased by 15% year over year. Also, the National Association of Realtors reported just a few days ago that pending home sales this March were flat from a year ago and remains very close to all-time record lows. In stark contrast, though, new home construction sales, a measure of contracts being signed between builders and home buyers, so it's really like a pending home sale, not a closed home sale, that increased by 8% for the same time frame. So existing houses, contracts being signed flat year over year, whereas new home construction rose by 8%. This is due to home builders offering closing cost credits, lower mortgage rates, and free builder upgrades in order to entice home buyers to place offers on brand new houses. It also appears our housing market is highly rate dependent as well. Once an inflation report gets announced, if it comes in hotter than expected, rates absolutely skyrocket. Even if it misses just by a little bit. So the data coming in is ever changing, and therefore rates are ever changing as well. And of course, a friendly reminder that real estate is local. Today's video is based on national trends, which may be different or the same in your area. Number 4, the direction of our U.S. housing market will depend on unemployment, mortgage rates, inventory, I would just say the rate of inventory changes, and the balance between supply and demand. Number 5, of course, this is the most important one. I appreciate you guys watching today's video. And of course, for all of you who has supported my channel for over 4 years now, I appreciate you guys so much. I mean, I wouldn't be doing this without you guys. So I appreciate you so much. If you haven't subscribed just yet, I invite you to do so. If you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. Hope you guys have an awesome day or weekend, and we'll see you on the next video.